in my own live trading room, I do like to run quite an interactive session. So please feel free to to ask questions, get involved. If I ask a question, please feel free to to have a go at it. Remember, there's no right or wrong answers with trading. The fact that you're having a go does mean that you're trying to improve your own understanding of what we're actually talking about. So we're going to try and cover two aspects today. We're going to cover a more practical view of the overnight range breakouts, and we're also going to take a look at the 8-hour setup as well, which is it's an alternative to the overnight range breakouts, more of a lazy man's trader. First of all, I do notice that we do have the start of some movements on pound yen. So we'll just take a look at these for a moment before we move on. So let's just take a look at we're on the 60-minute chart at the moment on pound yen. All right, so the horizontal red lines, the previous day's highs and lows. Now, following on from the price action sequencing, how do we actually identify a range? Range can be defined as, rather than try and get fixated or too fixed on, the overnight range high and the overnight range low from about midnight UK hours. So it's about, let's just get the vertical line. So from about there, that's about the 11 o'clock. There's 10 o'clock last night, the start of the overnight session, technically. So what you can end up doing is getting fixated with the overnight trading range from a time-based point of view. So what we don't want to do is fall into that trap, because although price is consolidated, if we, during that time period, quite often can be the case that, we've just got to take, I don't know if you can just see this here, but we need to take that little high there into account. A little bit of common sense, the range did start prior to 10 o'clock. Now, using the price action definition of a range, price will be contained within the previous swing high and the previous swing low. So, price is contained within the previous swing low, bar preceded and succeeded by high lows, and the previous swing high is a bar preceded and succeeded by lower highs. So, in actual fact, my range-bound location is between these levels. Price has made a lower high and higher lows within the previous swing high and the previous swing low. That is now my range definition. So it's slightly larger than the overnight trading range in this case, because prices confirm range bounds. What I'm interested in is where are the boundaries, the extremities of support and resistance, and that's where it is basically yesterday's high and yesterday's low. Price is contained within the middle of the previous day's high and the previous day's low. So that's basically our breakout levels. Now what's interesting is we've actually just got a breakout move, as you can see. So let's just follow this through. Now, typically my first port of call is the 89-tick chart. So I'm looking, first of all, for a breakout move. I'm not looking for a close. I'm not looking for 2-3 bars to move past my breakout level. So my breakout level is 21285. That was yesterday's high on my charts. And I'm looking, sorry folks, I'm looking for the first bar not to make a new bar high. So the first bar not to make a new bar high was there. Let's zoom in. So prices move beyond. Doesn't matter whether it closes, doesn't matter whether it just spikes past it, whether it's 1 point, a half point, whatever. I'm just looking for a movement past the extremity of my range bound location. So a move through 21285. I'm looking then for the first bar not to make a new bar high, which is this bar here. That is my first pullback bar. So the entry then goes above 21294 plus the spread, and I like to round up to a whole number personally. So 21305 is good enough for me. So 21305 is realistically where I'm going to place the trade. And to be fair, I've actually already got that on at the moment from 21305. Stop loss goes past the event. Now the event is the lowest point the price is retraced to after the breakout move. So after the breakout move, this the lower this bar, lower that inside bar was actually the lowest point. There's actually the lowest point. So we've got breakout, pullback setup, entry at 21305. Stop loss goes past the event. The event is the lowest point that price retraced to after the breakout move. So it's going to go, stop loss goes past that event, so below 21285. So for me, personally I like to round up and down to whole numbers. So for me, my stop loss is going to be at 21280. Testing, testing. We should have audio, folks. Should have audio. Right, why do you use the 89 tick charts? To be fair, I'm on TradeStation, and TradeStation does provide good tick charts. It will be different for different brokers. To be fair, I actually stumbled across the 89 tick charts. I was actually looking at this for trading the Dow at the time. And it was just one of those things that, you know, I just put it on foreign exchange and the charts look pretty good. It gives the equivalent of about a 2 or a 3 minute chart. Let's take a look at the 2 minute chart. I think most people will have a 2 minute chart available to them. So we can see the same setup. You know, if you don't have a tick chart, it's just my personal preference to look for a tick chart or to use the 89 tick chart. So the first bar not to make a new bar high after the breakout move, it's still the same location, So if you don't have a tick chart, don't worry about it. You know, work within, you know, what is available to you, and what's available to me and what's available to you might be slightly different depending on your current charting provider. So we've got the breakout move, breakout pullback setup based on the tick chart. And we've got the same trade, to be fair, on the 2 minute charts. What we can also do then is just take a quick look at the 15 minute charts and see what's going on. Now, what if this stops us out? What can we do to basically look for a trade? Well, if the tick charts or my primary entry time frame stops me out, I can then think about, well, hold on, well, I've still got the breakout move on the pound yen 15 minute chart, and I can look for, you know, the first bar not to make a new bar high there. So if price develops the first pullback bar, now we've got 10 minutes to close this bar, so even if this closes as a down bar, this isn't going to be a pullback bar. So we need the first bar not to make a new bar high. Moggy, yeah, you can do 5 minute charts. The thing you need to remember, folks, is there's no right or wrong. There's no right or wrong answer to trading. There's only what works. I've got my personal preferences, and I like to use an 89 tick chart first of all. If you don't have, you know, 2, 3, or 4 minute charts or whatever, which some brokers don't provide, they provide 1 and 5 minute charts. You know, feel free to, you know, use the tools that are available to you. You know, so 5 minute chart, you've still got the same entry there. You know, your first bar not to make a new bar high is developed. You've still got that breakout pullback setup. It's still the same chart, still, you know, the same pattern that's developing for us. So that's what we've got at the moment. So we've got breakout pullback setup. Nice to try and get a live trade on on these presentations. This is where it's at. And to be fair, let me just I've not actually got a stop loss in place, but let me just put a stop loss in, folks. So 212.80. So the way that I manage these trades, I've got an entry in at 05. I've got a stop loss at 80, which has just been triggered, which basically means I've got a 25 points stop loss size. That's my risk for the trade, 25 points. So what I'm now thinking about is what is the potential for this? What's the potential for this particular trade? What is my profit opportunity? While I just set this up, this is just a fib retracement tool, folks. Let me just set it up. Pound yen, it typically does about 300 point high-low range. So what I'm doing is I'm just setting up just the 0 and 100% line. I don't know if you can see what I'm doing there. I'm just customizing it. Right, let's just zoom out. Bear with me a second, folks. Now all I've done is got a fib retracement tool, and I've marked off the 0. All I want to see on this is the 0 and 100% lines. And what I've done is I've got a distance of 300 points between the 0 and 100% line. So basically that's an average day's move. That's what an average day's move is. On average it does about, historically it does about 300 points just from experience. If you've got a 100 period average true range, it's doing a little bit less at the moment, but I typically work on 300 points just based on experience. So what I've got is the 0 and 100% line, and now I want to work out my potential for the day. So I can literally just drag this anywhere I want around the charts. I'm going to add that average day's move calculation to the low of the day. So my potential for the trade is up near 215. And that is a 300 point high-low range. That is essentially my profit opportunity. So just to recap, we're then looking for profit. So we're looking for profit opportunity. So what if an average day's move has already been done? What do we do? If we've seen an average day's move, then my expectation for the day's trading opportunities is quite low, because an average day's move has been seen. My objective is to capture the main move of the day. That's my, that's my objective for a day trading opportunity, to capture the main move of the day. So if the main move of the day, I need to know what an average day's move looks like. So this is what an average day's move looks like. I've also got marked off 65% of an average day's move. I've also got marked off 65% of an average day's move, which is for some money management and trade management tactics that I've got. But at the moment, it's not reached it, and I've still got plenty of potential for trading opportunities for the trading day. Any questions so far, folks? Any questions? And to be fair, this one's just stopped us out. Just a question from Mark. Could you look at the pound against the dollar? Yeah, sure. Let's take a look at that on request. So we've got, right, first of all, let's just put the 60-minute chart on there. Right, so first of all, what springs off the chart at me? Well, previous swing high was there, which is also yesterday's high. Previous swing low. Prices made higher low, lower high within the previous swing high and the previous swing low. So that's my range bound location first of all. That's my range. So that's the range bound location there. We've got a breakout move to the downside. Let's take a look at this on the lower time frames. 2-minute chart should be good for everyone. So we've got a breakout move on the 2-minute chart, breakout pullback setup. First bar not to make a new bar low. It's quite a distance away, and price retraced quite significantly and then carried on. And what we've seen here obviously is prices springboarded back, and what we've got now is a move beyond the high of the range. So in this case we've got a breakout to the downside. It's reversed. Fair enough, it happens, but price is now broken out through the high of the range. So what are our options? Do we have a trading opportunity? Open question. Is there a trading opportunity? Anyone? Wait for a pullback, then go along. It's quite simple. Let me just go on to the 89-tick chart, which is my personal preference for landing. Just to cover the 89-tick chart, we had the breakout move to the downside. First bar not to make a new bar low. The downside was there. Highest point of the retracement is there. So you've got your entry and your stop loss location identified. In this case, it just didn't follow through, which seems to be the theme with the current market environment at the moment. Significant lack of follow through. So you've got breakout move to the downside. That depends on how you manage the trade. Depends on how you manage trade. You might have got a break-even trade. I like to scale out 2/3 of the position at 50% of the stop size. That's again what I like to do. What we now have is a breakout to the long side. So first bar not to make a new bar high. Price is just finding resistance at the overnight range high, still finding resistance, still finding resistance. There's the breakthrough, that range high that we've just marked up. So the first bar not to make a new bar high is on this little spiky bar here on the tick chart. So you're looking really for a long above 197.29 plus the spread. And my personal preference is to round up to the whole number. So it depends on the size of your spread. You're most likely to be able to get about 197.35. So you've got breakout pullback setup. The stop loss location is still developing. Stop loss location is still developing. Why is it still developing? Because it goes behind the lowest point of the retracements after the breakout move. So the lowest point of the retracement so far is at 197.09, and I can, if that's going to be the lowest point of retracement, I'll most likely have, to be fair, I'm not actually trading the pound dollar at the moment. It's not on my watch list to trade. But if it was, it would be at 0.5, just rounding down to the whole number. So you've got your breakout through the high of the range now. Prices pulls back. The first bar not to make a new bar high is the first pullback bar. In this case, we've got 2, 3, 4 more pullback bars. The lowest point of the retracement is 97.09. So you're going to have a stop loss below that level if price triggers your trade at 35. So that's another interesting live trade to cover. Sven, question from Sven: how about euro yen? Do you expect to break out or fall off as it's happened in the past? To be fair, if a trade sets up, it sets up. I'll still look for an average day's move. Merck, again, an average day's move. That's what I'm looking for. So let's just jump back to the 60-minute charts. Right, so does anyone know what an average day's move is on the pounds against the dollar at the moment? Just an open question while I set it up. It's about 150. I've got 160 on my 100-period average true range. So what I've done is, again, I've just customized a fib retracement tool with the 0 and 100% lines. 0 and 100% lines. The distance between them is 160 points. So that is my potential for the day, and I can drag that wherever I want. I'm going to place that on the low of the day because I'm looking for a long. So the potential for the day's move, based on an average day's move, is up to 198.20. So although I've taken an entry on the lower time frames, or there's an entry pending on the lower time frames on the 89 tick charts. Let's just go back to that. So the 89 tick chart, we've got an entry pending. Let's just clean the chart up a little. Entry pending on the lower time frames. Right, that should make more sense. So you've got an entry pending on the lower time frames. Stop loss is still developing. Stop loss location, rather, is still developing. I can use the lower time frames to basically get a tight, low-risk entry on an average day's move. So you'd have a 30 points stop loss size with potential for this to run to, based on an average day's move. Based on an average day's move, this has got potential to run up to 98.20. So if you're an entry, you've got 97.35 is a pending entry. Currently a 30-point stop loss size with potential to run up to 98.20. So you've got quite a significant, potential risk reward. So if my main objective is to capture an average day's move, that's what I'm looking to do, to capture that average day's move. So that's my potential for the day. There is profit opportunity available for me to capture based on average, what the pound against the dollar does. So that's my profit potential, and I can get a low risk entry based on the lower time frames initially, be it tick chart, 1 minute, 5 minutes. I'm looking for a low risk trading opportunity. Yeah, let's just go back to that because it is setting up actually. Let's go back to the pound yen. So we've got, let's just go on to the 89 tick first of all. Go back to the pound yen. Right, so we had the breakout pullback setup. That's got me in at 213.05. Stop loss at 80, that's been triggered. So in this case, I've actually appreciated minus 25 points. Now, it's not a problem. It's not a big deal because there's quite significant profit opportunity. But what's actually developing? Well, price is still ultimately pulling back. So I can do one of two things. All right. Well, we've got another pullback. So I can either take a second entry on the tick charts. Let's just put 5-minute charts on for those people who have 5-minute charts. So you've got 5 minutes charts. Again, my personal preference is the 89 tick, so I can go back. So you've got two options. You can continue with the 89 tick charts because we've still got a breakout pullback. Let's just pull back a little bit further. A little bit of a false move for the moment. So entry is going to be above the high. Actually, let's just get this in now. So I'm going to place a new entry for 213.10. Now this time, the stop loss is going to go past the event. It's now below 212.76. With a stop loss location below 76, I like to round down to the whole numbers with at least 2 points difference. So it's going to be for me at 212.70. Now, if price, let's just go to the 15-minute chart just to finish the thoughts. What I can look for is a breakout pullback setup. Price is broken out, but on the 15-minute, it's not giving me that pullback bar. There's 10 minutes to go on this 15-minute bar, and it'll be the first. Once that's done, it'll be the first bar not to make a new bar high. So that'll be the pullback on the 15-minute chart. But we've got another pullback that's developed on the tick chart. So it's got us in, stopped us out. All right, fair enough. It happens sometimes. Sometimes we can get a breakaway move, but we don't know it's going to do that until after the event. So we've got a breakout pullback setup, which we looked at, which stopped us out. We've got a second breakout pullback, or sorry, a continuation move, which the pullback stopped us out. Let's just go to the 89 tick charts. So we've got the breakout pullback setup that we were looking at. Got us in the trade, just touched us in rather frustratingly, stopped us out, and now price is continuing. So this is still a pullback. Price is still pulling back. So we can use this new pullback as a second entry or re-entry, or we can wait for the 15-minute charts to give me that pullback bar. And there's about 8 minutes left on this bar, so realistically, or most likely, this could quite easily be a pullback bar. The first bar not to make a new bar high, and that's what's going to develop. So everyone happy with the logic? I mean, it's interesting that we've got a few live trades on so far today, or looking at them in real time for a change, because we don't often have that opportunity to go through that. Everyone clear on the breakout pullback? And this, to be fair, pound yen's probably a good example of a trade that kind of messes you around a little bit, where it's gets you in the trade, stops you out, and then sets up again. Don't be afraid of re-entering a trade. It's going up. It's making higher highs, higher lows. We've got the breakout move. It's broken out through our range location, which was yesterday's high, which we considered. We've got the breakout pullback setup. First attempt didn't work out. Again, it happens. That's just the fact of life. And a new entry is developed on the 89 tick chart as well, or second entry. So it just got us in the trade. Price has pulled back once again, and we can still take that as a breakout pullback setup. So we can either wait for the this new entry on the tick chart, or we can look at the 15-minute chart and wait for a 15-minute pullback. There's no right or wrong with either or either. The tick chart's showing me a pullback. It's a valid breakout pullback through the high of yesterday, and through the high of the range that we were looking at. And shortly we most likely will have the breakout pullback on the 15-minute chart. So the first bar not to make a new bar high on the 15-minute chart. Let's just go back to the pound dollar for a moment, because we've got that setup that was developing. Again, let's just go back to the 89 tick chart. So we've got that breakout pullback setup. The first bar not to make a new bar high develops, and this one's just about to potentially trigger. To be fair, Bucky, at the moment, this month, the strategy is not performing very well at all. I'm not going to deny that, but all strategies go through cycles of doing well and doing badly. And to be fair, for the way that I trade breakouts, it's quite one of the worst periods that I've had at the moment. Very, very mixed trading. There's very much lack of follow through. I'm not going to try and deny it. All strategies have these phases where they don't perform well. And at the moment, this month so far, my strategy's not performing too well on the breakouts. Unfortunately, that's just a fact of reality. Right, okay, so breakout pullbacks. Right, let's just run through the currency cross rates. And so we've looked at 2 live trades so far. Let's start off on the top of my list, which is Pound Swiss. Let's just go on to CAD Swiss, which is the 60-minute chart. Right, so what do you reckon, folks? We've got trading opportunity. We've got an overnight trading range. There's the overnight range highs. Overnight range lows. So you've got a breakout attempt through the high, breakout attempt through the low, and it's still continuing to be range bound. So what do we do? Well, we've got a breakout attempt, no follow through to the long side. A breakout attempt, no follow through to the short side. So what are the options? Well, I can expand. If there's no follow through and price is quite clearly continuing to be, continuing to remain within the range bound location. What I can do is expand the range to include those false breakouts. Because at the moment there's no follow through on the breakout moves. So what I've done is we've got a breakout that's failed to the long side, breakout that's failed to the short side. So what I've done is I've just expanded my range bound location to include those breakout moves or those false breakouts where it just moves beyond the range bound location. So now I've included those spikes out as a part of the range bound location. And this is what I call a second breakout. So it's already trying to break out to the high, it's already trying to break out to the low, and I can look for a second breakout. So I've just adjusted my range bound location. So with new information, I now need to take that into consideration. Does everyone understand what I'm trying to illustrate? Does everyone understand that? This is quite a good example of when to just expand our range bound locations. So false breakout didn't trigger trade, short breakout didn't trigger trade. Let's take that into consideration with new information and just expand the range to include those spike outs or those false breakouts. So now I'll be looking for a second breakout, so breakout to a new high or a new low for the day to indicate a potential breakout opportunity. Entry is going to be for me on the tick charts, lower time frames, and look for that breakout pullback setup. Sorry, Oscar, I've just seen your question. I'll come to that in a moment. To be fair, my typical cut-off time is 4 o'clock, and I'll look for trading opportunities until about 6. But given the fact, if I'm not in a trade ahead of any major news announcements, I typically don't look for a new trade about 2 hours before. So things like non-farm payrolls, Fed announcements, interest rate announcements. If I'm not in a trade already, about 2.5 hours before that news item, I'll typically not look for a new trade and look for a post-news trading opportunity in exactly the same way. New highs, new lows for the day with profit opportunity. The profit opportunity, the potential for the day. As long as there's potential post-news, there's no reason why you can't take that breakout pullback to a new high or a new low for the day, as long as you have a profitable opportunity available, and that's based on an average day's move. So if I've got, for example, 150-point high-low range, and prior to the Fed announcement tonight, the high-low range for the day is, I don't know, say 140 or 150 points. It's done an average day's move. There's no trade for me because there is no profit opportunity. It's already done what I expect it to do for the day. How did I come up with my watch list was a question. That was something I was going to come on to later. Let me just first of all go through the 8-hour setup. So we've covered breakouts and seeing a few of those in real time and how to adjust the ranges. how to adjust the ranges, how to recalculate a range, what happens if we get stopped out. You know, we can look for a re-entry, that's not a problem. We can either look for a re-entry on the tick chart or look for the 15-minute chart. Is everyone happy with the breakout pullback setups? What happens if we get stopped out? Looking for re-entry opportunities and expanding the range. We've had some pretty good examples of the things I wanted to talk about today. Is everyone happy with those concepts? Excellent, excellent. Right, okay, so the other strategy that we went through, this is 5-minute day trader. 5-minute day trader. It's available on my site. It's also available in the blog. Let me just get the links. So it's available there. It's available there. And it's also available on the blog as well. There's a little bit more detail on my site. There's a few other concepts that I talk about there as well. But 5-minute day trader. This, for anyone who's seen it before, used to be called "Don't Give Up Your Day Job," because it did mean that you didn't have to give up your day job. Basically, what it is, 8-hour charts from. Let's just see the closing time that I have on my chart. That's just closing times that I have on my charts. Oops. Or 6 o'clock. So 10 till 6. 6 till 2, and 2 till 10. That's the closing time of that. That's just the default chart on TradeStation. Appreciate people who use MetaTrader might use something slightly different, but that's just the way that my chart is set up. So, 5-minute day trader rules. There's only 4 of them. Identify trading opportunity, which is an inside bar. Select the direction, place your trade, manage your trade. 4 rules, nice and simple. Let's just take a look at pound Swiss, which is set up quite nicely. So, first of all, what we want to do is identify at 6 o'clock UK hours. So basically, 6 o'clock, this is the overnight trading session. So that's the 6 o'clock bar this morning on pound Swiss. That's the 6 o'clock bar. Yep, inside bar. Mark off the highs and lows of that bar. And that is your trading opportunity. Let me just zoom in so we can see this. All right, everyone with me so far? That's the rule. Identify trading opportunity. The trading opportunity is an inside bar. This is just another way of viewing the overnight trading range. Rule 2, select a direction. The bar prior to the inside bar dictates the direction. It closed higher than what it opened. It's an up bar. So you're looking for a long trade. So you'd look to go long above the inside bar with a stop loss below. And at 2 o'clock, come back, check the trade. Now this current live bar. This current live bar is going to close at 2 o'clock. So wherever the close of that bar is, at 2 o'clock, you're going to bring your stop loss up 10 points below. So appreciate this is still a live bar. But wherever the close of that bar is, now in some cases it might be that you're going to have quite a significant profits. But other times, at the moment, if price closed where it is now, so you're looking for a long entry 10 points above the high of the bar, so 205.29 is the high. So 205, so about 205.40, just call it for argument's sake. So 205.40 for argument's sake is where you'd be looking to go long with a stop loss below 204.99. So for argument's sake, if this bar closed at 2 o'clock, and this was a completed bar now, I'd be looking to bring my stop loss up to 10 points below the close of the bar. Now the current price is 205.29, so 10 points below, you're going to have it at 205.19. So just for argument's sake, so what you would have in that case would be a reduced risk trade. Now you still got the opportunity for price to continue moving, but in this example, if price closed at that level, all you'd be doing would be reducing your risk. Now there's going to be times where that actually happens. To be fair, no, because if we look at the, let's just double check everything. Let's just check. It actually broke the low. This is the 60-minute chart now. Just looking at it in a bit more detail. It actually broke the low of the inside bar first, and then would have triggered the trade. So this is one of the, does that make sense? So it's triggered the low first, and then it's triggered the high. Sure, you can add in the spread. I don't mention the spread because everyone's got different spreads. But yeah, 10 points plus the spread. Some people it's 4, some people it's 6, some people it's 10 points. It depends on your broker, but yeah. So whenever you buy, you need to take the spread into consideration. So at the moment, let's just go back to the 8-hour charts. So at the moment, this technically would be a live trade from the 8-hour charts perspective. It did take the low of that inside bar out first, but it didn't trigger the trade. So it triggered the low first. Doesn't mean it's voided. The high is being triggered. So you'd be looking at a long at 40. Let's just more accurately represent where you'd be in from. You'd be in from 40. And you'd have a stop loss at about 95. Right, so you've been long at 205.40 based on the 5-minute day trader, with a stop loss at 204.95. That's where you'd be on this particular pattern. So select, 4 rules, find an inside bar at 6 o'clock. That's basically the 10 till 6 time frame. Price action needs to be inside the prior 8 hours. So we've got an inside bar. That's the trading opportunity. Now, which way do we trade it? Which way do we trade it? The prior bar selects the direction that we're going to look for this. So this is an up bar. It closed higher than what it opened. So you're looking for a long trade. In this case, we'd have a long at 205.40 based on this methodology. Stop loss at 204.95. And at 2 o'clock, wherever the close is of this current live bar, you're looking to bring the stop up to 10 points below the closing price. Is everyone clear on that? Everyone happy? Everyone understand? Again, this is a 5-minute, it's not even a 5-minute decision. When you've got the, happy with the rules, it literally is a 2-3 minute decision. Any questions on this? Yeah, I mean, to be fair, you'd be, just in your question, would you be in a loss right now? Yeah, you'd be sitting on a paper loss, but you've got to bear in mind, this strategy was developed for a few students I had who didn't have the time to always screen watch. So if you're not available to place a trade, but you don't want to swing trade, what options are available for you? So I devised this methodology to basically day trade without having to sit and screen watch all day long. So the idea behind it is you're not about to manage the trade. You identify the trade, put your buy order in, attach a stop loss order to it, come back at 2 o'clock. You don't have to watch the trade all day long. So at 2 o'clock UK hours, you come back. So at the close of this next 8-hour bar, you're then going to assess the closing price of the 2-hour bar for where that is, and your stop loss goes 10 points below the closing price, hopefully to lock some profit in. But at the moment, yeah, you're sitting on some paper losses. You've not appreciated those losses. It's only 10 points to get 10 points against you at the moment from the entry level. But what you're looking to do, again, for example, if price closed where it is at the moment at 205.33, you'd be bringing your stop up to 23. So what actually happens in most cases, in most instances where you're not stopped out and you're not making a profit, you're going to significantly reduce the risk. So if price closed at 35 at 205.35, you're going to have a significantly reduced risk on the trade. So it's only end up being potentially a small loss. Now at that point, it's still only a potential loss because you've not been stopped out. You've tightened your stop up to reduce the risk on the trade. But on the next period, the next 8-hour period, you could start to see some movements. What about the 4-hour? Right, okay, so let's just take a look at this on the 4-hour chart. What you're looking at is the 4-hour chart. Again, not everyone's got 8-hour charts set up. So what you can do is at 6 o'clock, you're looking at the prior to 4-hour bars, prior 2 4-hour bars. So those 2 bars, you blend those together, are inside the prior 2 bars for the previous 8-hour session. So you can quite easily work it out. Tony, would you increase 10-point stop depending on a particular pair? Yeah, that's certainly something that you can do. Again, remember, there's no right or wrong way to trade. This is just the way that I prefer to trade this particular pattern. It's not an I'll let you know now, it's not an active pattern that I trade at the moment, simply because I'm around to day trade. I'm around to physically place orders and watch the markets and look to try and manage my trades and manage my orders. This strategy is designed for people who don't have time to day trade and don't want to swing trade. So yeah, I mean, you could use 10 points, you could use 15 points, something like the pound yen, pound Swiss. You could say, I'll use 15 points because it's slightly more volatile. And to be fair, so not like euro, let's just take a look at the euro dollar for a moment, and dollar Swiss. You might say, I'll use 5 points because they are quite low volatile pairs. Take a look at the dollar Swiss. So dollar Swiss, we've got a similar situation. We've got an inside bar here. You might say to yourself, well, I'm only going to use 5 points plus the spread because it's quite a low volatile pair, low volatility pair. So that's something that you would have to decide for yourself. Personally, to keep it mechanical, easy for back testing, it's easy to say 10 points above and 10 points above and below the inside bar. It's just easy to say that because it keeps it mechanical and rigid across the currency pairs. You then want to run with that yourself. I mean, the last guy that I taught this to, it's a friend from school actually. I just happened to bump into him when he was looking at trading. I've actually taught this to him October last year. He spent 3 months paper trading it, demo trading it, making it his own. Now, the way that he trades 8-hour bars is on the broker that he's chosen. He doesn't have the same configuration setup or the flexibility of configuration on his 8-hour bars. So his 8-hour bars are from midnight to 8 o'clock because that's all that's available to him. So he can be flexible with it. And he's adapted it to his, personal lifestyle, and his, what tools are available to him, his work commitments. He's not available, to screen watch all day. He's got a full-time job, and he's now finally gone live on, in the last 2 months, and he's doing pretty well actually with just this single strategy alone. Let's just run through the currency pairs. We looked at CAD Swiss. Again, identify the trade. There's the inside bar. There's the inside bar, CAD Swiss. Prior bar is up. You're looking for a long trade. Come back at 2 o'clock. Check the trade. You've been stopped out, you're in a profit, or you're going to reduce your risk. Pound yen. You're looking for an inside bar. There's your inside bar at 6 o'clock. We've already looked at this from an intraday viewpoint. Inside bar. 6 o'clock inside bar. The prior bar is up. You're looking for long trades. You've got a long trade. From the 8-hour bar perspective. Now, technically this would be in a profit, but from a day trade point of view, I've actually refined that based on what's going on the lower time frames. But from the 8-hour chart's point of view, inside bar, there's the trading opportunity. Select the direction. The direction is up. You're looking for a long trade. This one would be in a profit for you. Euro yen. Inside bar. Price inside the prior 8-hour bar. It closed lower than what it opens. You're looking for shorts. That's not triggered. That's probably not going to trigger, to be fair. So at 2 o'clock, this would be a situation where you come back, the trade's not triggered, cancel the order. Take a look at CAD yen. Inside bar on CAD yen. The 6 o'clock 10 till 6 bar was inside the previous bar. The previous bar was up. You're looking for a long. Come back at 2 o'clock. You're either going to be in a profit, you're being stopped out, or you're going to reduce your risk on the trade if if it's not making you any money. Euro dollar, inside bar, prior bar was down. Let's just check this one out. This one would have given you a loss. Let's check the 60-minute chart for the detail. So it would have got you in the trade and stop chart. So there's one that would have lost you some money. Remember which way it went first. Right, so inside bar. Inside bar identified. Prior bar is a down bar. It closed lower than what it opens. So you'd be looking for a short. This one would have stopped you out. Let's just do the calculation for how much it would have cost you. So 10 points below, 10 points above, so short at 50 with a stop loss at 80. So it cost you 30 points on that particular cross trade. So that's appreciated your loss. Pound Swiss, we've already worked through that one. Inside bar, identified the trade, identified the direction. The prior bar is up, looking for a long trade. This one technically live. We've currently just sat on a paper loss at the moment. Dollar Swiss, similar to the euro. Inside bar, prior bar is up, looking for a long trade. Did trigger the low first. Oh no, triggered the high then the low. So that one would have appreciated the loss as well. And pound against the dollar, inside bar, looking for a long trade and opportunity. Inside bar, identify the trade opportunity. Prior bar is up, looking for a long trade. Come back at 2 o'clock and check it for, you're either going to be in profits, being stopped out, or you're going to reduce the risk on your trade. And that's it, folks. That's where we're at. Let's take a look at the 2 live trades that we went through earlier. Let's take a look at the 15-minute charts. So we were looking at pound. Any questions on the 5-minute day trader? Question: if the strategy is old, have you thought about refining it? Yeah, I mean, I have thought about refining it, but to be fair, I mean, I'm around to trade all day, so I've not had the time to do that. But at the same time, the rules are quite easy. There's 4 rules, quite easily defined. It's a very mechanical, unemotional, completely unemotional strategy, and it was designed for those people who don't have time to day trade. You know, it's simple as that. If you want to refine it yourself and change, for example, on the more volatile pairs, you might say, well, you know, on pairs that have an average day's move of greater than, I don't know, say 200 points, you might say, well, I'll use 15 points. You know, you'd have to test that yourself. I've only looked at 10 points above, 10 points below the inside bar. That's all I've done. That was the calculations that I worked out, and the results were very pleasing. So I didn't look at it any further. You know, again, it's all down to personal preference. You've got to remember, if there is no right or wrong, you can still work within the framework of a strategy and tweak it to your own personality. So pound yen, we looked at pound dollar. We looked at pound dollar. Breakout pullback setup that's developed. So there's your breakouts through the high of the overnight range that we were looking at. Technically, the trade's triggered. I'm not personally got a trade on this. I don't actually trade pound dollar at the moment. Stop loss would be below 197.09 with a stop loss at 05, and it's currently just around the entry level. And the pound yen is the other one we were looking at. Looking for a re-entry on pound yen. Breakout pullback. The first one we went through appreciated the loss. Second one, or the second breakout, would be 213.10. This one I have got an order pending with a stop loss is going to be at 70. And while I've been talking through those 2 strategies, you've got the first bar on the 15-minute chart, not to make a new bar high. Same setup that we saw on the tick chart, just on the 15-minute chart point of view. Price is broken out. We've got the first bar not to make a new bar high. Entry above the breakout high. Stop loss goes past the lowest point of the event, or past the event, which is the lowest point of the retracement after the breakout move. So there's 2 live trades for us, and we looked at a few from the 8-hour charts perspective. Any questions, folks? Any questions whatsoever? Do I trade the FTSE? I have done, but no, I've not traded it for about 6 years. Pound yen currently on screen. Just still waiting for a trigger. 213.10. Not triggered on my charts yet. Which software gives you the 8-hour charts? To be fair, my charting platform is TradeStation. You can get them on MetaTrader, I believe. You'll have to get some code sorted out because the default chart is slightly different, but you can code something yourself. Most are pretty flexible. No problem at all, folks. Right, well, I'll get some examples of what we've discussed today on the blog. If you do have any questions, please feel free to ask. You know, if you want to continue conversations, you know, ask questions on the blog, please feel free to. or you can obviously contact me through my site, email, Skype, or the ticket system that I've got on the website. Please feel free to contact me if you've got any questions, and we'll try and sort